We were talking about the rand and its new legs that it seems to have acquired as from yesterday. As I was saying at the beginning, we saw a gain of as much as 10 cents today. What is driving those gains?
Well, the lack of momentum is proving to be very expensive for rand bears. The rand is still above its 200-day moving average of 7.19 to the dollar, and rand bears have now failed to breach 7.35 to the top side on 3 separate occasions. This suggests that the rand bearishness is starting to wane, and although the dollar is still weak, the rand has managed to secure some short covering against a number of major currencies over the past trading sessions. So the rand bears need to forge beyond 7.35 quite soon, and if not, they will need to capitulate, even if South African economic fundamentals remain uninspiring.
Yeah, those are South African economic fundamentals. Yesterday we saw CPI numbers coming in almost in line with the market, but 3.7%. Is the market in any way reading here that we may get into a tightening cycle much sooner than expected, and therefore the rand's yield advantage is going to be restored pretty quicker than most people have been expecting?
Indeed, it could possibly be the case. However, StandardBank is of the view that the CPI inflation rate is expected to average about 4.3% for 2011, and we expect that the SARB to resume a tightening cycle only in the first quarter of 2012.
So you're not changing your view on that front?
At this stage, the view has still remained unchanged.
Even after the numbers that we saw yesterday on the retail front, 8.3% versus 7.7% in December, again suggesting that there is some kind of momentum that is building up within the economy. You don't see demand-side inflation pressures coming through at the moment, no?
At this stage, we do see some inflationary pressures coming in from food prices. Food prices increased by 2.9% in December from 1.5%, in January from 1.5% in December. And fuel costs are also expected to add some pressure there, with the oil remaining above $100 per barrel. Consumer confidence is also has increased, and consumer spending as well. But at this stage, inflationary pressures remain well contained, and we expect inflation to oscillate within the 3 to 6% target for this year.
Yeah. Shireen, the numbers that we've seen so far all appear to be suggesting that the economy is in much better shape than economists have been expecting. What sense are you getting out of it? What sense are you reading about the state of the South African economy and where we're likely to go on from here?
Indeed, it is a little bit inspiring. We do see GDP growth coming in a little bit stronger. We expect GDP growth of about 3.7% this year. So in all, the economic fundamentals are in place, and we do see the economy progressing further than what we did see in 2010.